Hi, this is Mohan Kumar from Rainy Bulls, and I welcome you to another episode of Nifty chart analysis using the Triple Threat Intraday Strategy. And in this video, let's take a look at the Nifty chart for April 28th, 2023, and see what kind of entry and exit signals the strategy would have given us. So let's take a quick look at the chart. Great. So you're looking at the two chart view in the trading view platform. So we have the Nifty spot on the left and Nifty futures chart on the right, and both these charts are set to a 3 minute time frame. I have the indicators already applied, but I've kept them in the hidden mode. So before I bring these indicators on, let's take a quick look at today's price action and the market behavior. The market opened a little above the previous day's close, as you could see here, and the market swiftly moved down, right? In the first 1 hour, you could see the market actually was showing some kind of bearish behavior. But then later on, the market turned around. And since then, the market actually rallied and it closed higher. So it was a second consecutive trending day. And so let's bring these indicators on and see what kind of entry and exit signals the strategy has given us, while using them along with the price action pattern and the candlestick patterns. All right. So let's quickly turn the indicators on. So I have these three custom indicators, which have been built exclusively to be used on the Nifty 3 minute chart. Right. These indicators are not available out of the box in any charting platform. Right. It is just for your information. So I've discussed in depth about these indicators in my previous videos, like how to use them, how to read the signals, right? What these indicators are, and how do you use them in conjunction with the price action and the candlestick patterns, right? So the first indicator is the locations indicator or the price levels, which marks the key locations from where the price may actually react and turn around, right? Like the daily pivots, the previous day high, low, close, and I also bring in the resistance support zones from the past price action, right? And there's also volume candles, moving averages. They're all part of the price levels indicator, right? And the second indicator is the market participation, which now actually plots the dots, right? As you can see, there are three colored dots: black, blue, and green. And these are nothing but market participants, and they would actually indicate how quick the price may react and move either to the upside or to the downside. So this participation indicator plays a major role to let us know if the momentum is really going to pick up, and if yes, whether these dots appear at the right locations or how to consider them. All this is signaled by the market participation indicator, and the trend line indicator is is a third. And this actually talks about how strong the trend is. The trend has peaked out or bottomed out. Is the trend going to reverse, or is the trend going to continue, right? Or is it consolidating? So all these signals can be read if you know how to use the trend line indicator. So with these three indicators, along with the price action and the moving averages and candlestick patterns, that is how we take trades. We read the price action in conjunction to the indicators, and then we get into high probability setups, right? So let's take a quick look at the price action now with indicators applied, how the same market behavior would have made more sense, right? So the market opened right above the previous day high, as you could see, right? And then the market quickly moved below the previous day high towards the central pivot range. So if you are a technical analyst, if you have been following the technical analysis for quite a while, you know the importance of the central pivot range, right? And so if not, central pivot range is a major location from where the prices may tend to react, and in most cases the price may actually find a great support, right, or a great resistance. In this case, the price moved from above the CPR towards the CPR, and that can act as a quick or a great support. And also, you could see the moving average band. The black moving average is the higher time frame, and that again, these parameters and settings that you see on the charts, right, have been refined, fine-tuned, and optimized to work, like to actually give us great signals, and they have been back tested for many years, and that is how this strategy has been formulated. Now, you could see that the price taking support at the black moving average, and that's very close to the central pivot range. And looking at the EMAs, which are all like moving higher, right? And it's a trend. It's trending to the upside, and it's a clear. It's obvious, and it's evident that the prices may move higher. As you could see, as the price actually dipped down to the moving average, there's a huge participation as indicated by these dots right here, right? And you can also see the volume candle that just appeared right at this location. So, and look at the trend meter, it is almost close to the green zone right here, which indicates that the market is near the bottom. And considering the location where the price is at, now this is a very great support, and the prices may react and reverse. But is this an entry point? Certainly not, as per the strategy, because the price quickly, it moved down below the previous day high. So this zone might act as a resistance. For all that we know, anytime the price moves below a major location, we need to wait for the price to go test that level. And if it actually goes above it, in this case the price moved below, so if the price goes above this, then we could actually consider this move or the trend to be really true, to be on the upside. Okay, so that exactly what happened. The price quickly moved, right, almost close, as you could see. Let me bring the sorry, I think I have some issue with my mouse. Okay, so as you could see, when the price actually moved close to the previous day high, at least on the futures chart, it was actually showing some kind of candle patterns right here. It was not very clear, but this candle right here, a bullish candle raising off of the previous day high. At the same time, you could look at this Nifty spark chart where this blue candle right here, right? It's a high volume, and you can also see a green participant, which indicates they are major stakeholders, and which indicates that there are a lot of people, who are entering the market. And considering the location of the price, considering the trend, the price may tend to move higher, right? So this is a high probability setup. The high of this candle is where we enter. The low of this candle is our stop loss, and we stay in this trade as long as the trade meter gets into the red zone, right? And we trail our stop losses, to the green moving average, right? If the price is at a major location, right, and if it has a lot of participation, then we exit the trade based on the trend line. If it is in the red zone, right, that is how we actually take profits. Now, if you are a conservative trader, you quickly book profits when the price is at a location and having a lot of participation. Like in this case, the price moved above the previous day high again, right? The price swiftly moved, in this case, to the daily resistance level, right? As you could see, and there is some kind of resistance that's going on, but the price certainly is not at a location in this particular chart, right? It is somewhere right here. And look at the trend meter. In this case, the trend meter is not into the red zone. So you could do one of two things. You could actually take a 50% profit, meaning if you're trading with 10 lots of Nifty options, you could actually take profits around for 5 lots, keep the remaining 5 lots, and trail your stop losses to the moving average. So as you could see, if you would have done that, you could have traded your stop loss to the green moving average, and you would have taken your profit somewhere here. When the trend line was kind of like signaling the price was moving higher, but the trend was like kind of weakening, right? And here the trend very well got into the red zone, almost, compared to this side, right? So this exactly is the place where you would have taken the profits, and it was a good move to the upside, right? So you have taken partial profits here, and your second target was here, and it was a good move to the upside. Do you enter into a short trade right here, considering the trend being, sliding down? There is a conflict, right? Certainly not. As you could look at the price action, the price actually moved above the morning range, right? This indicates a sharp, the trend being to the upside and the momentum being really, good enough. So we wait for further price action to confirm if the price is going to go further, to the upside, or if it's actually going to consolidate and then have a sharp fall back to the previous day high, right? So as you can see, the price entered into a consolidation mode, right? You could see there was a huge consolidation right above the daily resistance, which is the red line, right? And as that consolidation was happening, you could see the trend line was kind of declining, and it fell almost close to the green zone, right? So after this dip right here, the second dip happened, almost after 3 hours of trading time. It happened around 10:15, and the next dip happened around 2:15, right? 11:15, 12:15, 1:15, 2:15. It's like 4 hours of time. The price actually made higher highs and consolidated, but the trend meter actually dipped down. So this again, it shows a weak move to the downside, right? And the trend to the upside is strong. So we read the signals, and we have a lot of patterns that we discuss in the webinar, right, about how to read the trend line signals. So we have discussed this in the past. When the price actually breaks a certain level and it actually moves a little higher and then retraces back, right, as the trend line moves below the 50 mark, right, that is when we try to take trades. As you can see, the price dipped to the resistance here. At this point, the same point when this price moved higher and retraced back to the daily resistance, right, the price was not ready to break out from this level. But as we moved towards around 2 o'clock, the price made a move slightly above, right? Even on both these charts, you can very clearly see the price moved a little higher above the daily resistance. Then it retraced back to the daily resistance right here, and the trend line clearly indicated that it's making a dip or it's like very close to the bottom. So considering the moving averages, considering the trend, given the fact that the trend is like to the upside since the last 3 to 4 days, right? And the price nicely has taken support at this black moving average, right? As you can see from here, right? Again, right here, right? So this dip with the trend line, with the volume candles right here, with participants entering, there's a very clear indication that now the price has got the momentum to move to the higher side. Okay, so this exactly is where we take a second trade. The high of the close of this candle is our entry. The low of this candle is a stop loss, and then we actually move. As long as the trend line is below the red zone, we hold on to our trade. And when the trend line moves into the red zone, that is when we tend to take our profits. So we either trail our stop loss, right, or we wait for the trend line to move into the red zone. So in this case, it was a nice move to the upside. It actually made a new higher high, right? You could see a lot of participation at a location. There's no clear location as here for the price to swiftly move down. So we wait for the price to dip, right? And then it happened, it dipped to the green moving average. The trend line also had a dip. It still did not move into the red zone yet. So when the price moved into the red zone, you could see there was a sharp move to the upside. So it was a fantastic rally, right? If you have actually, had the patience to wait out based on the strategy, you have actually taken a good profit in this particular trade. So the two great trades you have taken, okay, the first one being this. So let me quickly remove all the drawings so you can clearly see the kind of trades, the trades that we have taken, right? Great. So the first trade was this. This was our entry, right? This blue candle right here. Considering the price line, trend, right, and the location, we took this first trade right here, okay? And the risk was very small. You could see we always risk one candle, but the reward is going to be very huge. That's the beauty of this strategy. So it's not 1:2 or 1:3. It's 1:2 infinite, right? Infinity is what I would call. So you hold on to the trade as long as the trend line indicates that it has peaked out, right? Or you trail your stop loss to the green moving average, and you only exit when the price closes below the moving average, or when the trend line actually is into the red zone and showing some kind of weakness, right? It's declining or something like that. So it was a good move. And the second move is we did not do anything in this consolidation phase because there was no key location. The morning range is the next key location. The daily resistance was the next location. The price broke both these levels and it's trading somewhere, in a zone which is where there is no location, right? It's a no man's land. So we do not actually take trades. Location is very important. Either it should be a double bottom, right, a double top scenario, or no, there should be a clear indication about the price moving down, right? In this case, the fact being that the trend is to the upside since few days, right? We do not take a chance. It's a low probability setup. We do not take a chance when the location is not right. and when the trend is up, right? There is no short position right here. So we wait, and this post this consolidation, we saw how the trend line behaved, right? As we discussed, there was a beautiful price trend conflict as the price consolidated. You could see the price, but the trend line actually, was flat. Now this is a very great signal that the price is now going to move higher, and that exactly happened. So the second trade happened right here, and this was our entry candle, right? So, and this was a stop loss again. We risk one candle and look at the reward that we've taken, right? So that's the kind of signals that we get from the strategy. So the three pillars that I've discussed in other videos is the passion, towards day trading, is a key factor for you to thrive in any condition, right? And then you need to have the patience to wait for the right setups to emerge and take only the high quality setups, right? If you're having a pinch of doubt or if you're going against the strategy, then you might actually not be in the right position or in the state of mind to hold on to your trades because you don't have the right exit signals for you to hold on to a particular trade. Okay, and there is no plan and there is no strategy at all. So you need to have the patience to wait out for the right setups to emerge, right, and take only high quality trades. And the third being perseverance, right? No matter how many times you lose, if you play by the books, if you're losing a particular trade, now you still played by the book. You played by the entry conditions and exit conditions, right? But the loss is part of the game. So perseverance is like you being persistent about what you're doing, no matter how many times you fail, but you still keep doing the right thing, right? As dictated by the strategy. So passion, patience, and perseverance, the three P's, right? The three pillars that is going to define your day trading career, right? And how well you're going to actually, thrive in this business. So we discuss a lot in the webinar, like we talk about the trading psychology, how to actually manage your emotions, right? How to actually train your brain to look for the right patterns, right? And we talk about the strategy itself, like trade management, risk management, money management. It's very essential that you understand the end-to-end aspects when you're day trading, particularly when you're day trading, right? And so there is a beautiful course that I've formulated. It's an end-to-end course targeting beginners and experienced traders, right? It's a one-to-one private session. It's going to be for 7 to 8 hours roughly. So we're going to talk about a lot many concepts like the price action patterns, the strategy, all these indicators, how they have to be used in conjunction, right, with the price action patterns, how we read the confluence of signals, right? And so there's a lot of the things that we discuss in the webinar, right? And if you're really interested to take an end-to-end course, right, and if you're really excited about getting started with day trading, if you want to learn a great strategy that's going to really help you to take quality trades and create generate profits right from month one, please don't hesitate to call me, right? Drop me a message at my WhatsApp or my email ID to get to know about the course. I've actually done a couple of videos in the past to list out the topics. So since it is an end-to-end course targeting beginners, right? The course covers all topics like getting an account created, how to actually get the trading view charting platform, a subscription to it, and all of that. But if you're an experienced trader, if you already have access to the accounts and the charting platform, you just want to know the strategy, how to use it, and how to actually get into trades, then I can tailor the content to fit your needs based on your experience in the stock market. Okay, and that is why I have this private one-to-one session. So I don't conduct sessions to a group of people at once, but rather it's going to be a one-to-one meeting. Okay, so we could actually make the most out of the time, like 7 hours of time. You also get 90 days of charts and all these video recordings with clear entries and exits for you to back test, for you to train your brain to see the patterns clearly and to gain the confidence, right? And you get 30 days of support post the webinar. So it's a dedicated one-to-one support. We could ask any questions, clarify your doubts with respect to the strategy, with respect to any topics that was covered on the webinar, right? So that way you will be confident to take trades. You'll become independent over a period of time, right? So please do contact me to get to know more about this course. And until I get back to you with another episode of Nifty Chart Analysis, it is bye from me. And till then, take care of you and your loved ones. And thank you for your time. Bye bye.